Hey traders, Raghee here, and in this video we're going to talk about the new all-time highs on the NASDAQ as well as the sectors within it that could give us some better opportunity for what's going on right now in the market. So first of all, let's just step back and compare what's happening in the NASDAQ, whether you're looking at it through the NQ or the QQQ, but what's happening. Now, you might remember some time ago I outlined a pattern that was occurring in one of these free videos where I said, look, we're getting this 1, 2, 3 pattern, and right here on April 1 we got the breach, and we've seen what's happened since. Now, this is a continuation 1, 2, 3. We can see these continuation 1, 2, 3s in a number of places, but this is a continuation 1, 2, 3. And with the market realizing that at this point tech was in many ways inexplicably dumped at the end of February, and all we've done now is just made a slightly higher high than the swing high we saw back on February 16. That swing high was 13,900, and right now we're at 13,994. So really 90 points above that. So the market's kind of taken back what it lost, and now it's at a very interesting inflection point. Does this invite more buyers? Do traders feel better buying at higher highs right now in the NQ? Is this broad-based risk appetite? And the answer to that question is no, this is really not super broad-based risk appetite. Higher highs in the NQ drug the ES higher to slightly higher highs. We did not see higher highs in the YM, which means that chances are, as the market right now is favoring the popular kid in class, the resurgence of tech, it's not keeping an eye on industrials and transports and the things that have actually been relative outperformers in this environment. So the opportunity now comes in where is the market sort of dropping the ball? Where is the attention coming off of? Because that is where the opportunity is most likely to be. But why is tech higher? And let's take a look at this. What is happening? Remember, when you look at a broader average, and we're going to go back to the QQQ here, what you have within it at the first layer are sectors: XLK, XLC, XLY. All right, so you have these sectors. The next layer down, you have the stocks that are heavily weighted within those sectors. So, for example, with the XLK, you have Apple and Microsoft. And the XLC, you have Facebook and you have Google, which you can see have very strong trends, actually haven't transitioned out of their trends in any meaningful way. And then at the XLY level, you have names like Amazon and Tesla. All right, Amazon and Tesla. So this is ultimately what you want to remember when you're looking at these sectors. Where do you have relative outperformance? Perhaps the best in the NQ, Facebook, and Google. And these have been relative outperformers for a while. Let's take a look at Facebook for a moment. Facebook's been bouncing off the wave here since it was able to, well, take a look at the 1, 2, 3 continuation here. It was a very ugly large one, but as soon as we were able essentially to trade above, call it 286.80, 287, it's been able to break out of its movements. That's that 1, 2, 3 pattern. And then in Google never broke the wave. Google never broke the wave. So as Google was resting upon the wave, this was all dynamic support within the context of an overall trend. And we've just really started that continuation. Look at the volume ledges that we clung to, like a climber scaling a wall. Look at the volume ledges that we clung to. So it's no surprise that we're continuing higher. So what are the next sectors that we can look at for possibly the market playing catch up? I keep a very close eye on semiconductors right now. And I would also keep a very close eye on cloud computing. So and cloud computing just broke out of a bottoming, of a 1, 2, 3. You can see here, that's a continuation 1, 2, 3. Broke the wave. And today was actually the very first day for CLOU to break out. So what we've done here is we've started with that NASDAQ perspective where a futures trader would begin. And then we've dove below the surface to what makes the NASDAQ tick for better opportunities. I hope that makes sense. I hope this is a process that you will consider and follow. It will make your watch list building and your trade selection that much better. I'll see you in the next update.
Without simpler trading, I could not have financial independence.
This is one of the best investments that I ever made in my life.
It's helping me find consistency.
It's one of the things that won me